Good morning. This is Mark Soderberg with ADM Investor Services with your morning ag outlook for Thursday, September the 5th. Pretty much the exact opposite overnight of what we saw during yesterday's trade. A little bit higher here in the bean oil while everything else is pulling back a touch. Corn right now is down 2 to 3 cents, down 10 to 12 in soybeans. Wheat prices are down about 6 to 8 right now in Kansas City and in Chicago. Down only 3 to 4 in Minneapolis. Meal is down $7 to $8 with oil up 40 to 50 points. Late yesterday, there was an agreement reached between labor unions and soybean crushers in Argentina to avoid a strike. And this is what has likely triggered the turnaround here overnight in meal futures. Speculative traders yesterday were active buyers across the ag space with the exception of bean oil, where they did sell about 5,000 contracts. They did buy just over 10,000 contracts in both corn and soybeans and roughly 5,000 in wheat. Open interest was lower across the board, led by wheat, which was down just over 10,000 contracts, which to me suggests that yesterday's strength was largely short covering in nature. We got several production estimates yesterday in advance of next Thursday's USDA production and WASDE data. In corn, pretty much all of them are coming in a touch below the USDA forecast of 15.147 billion bushels in August. In beans, it's a little more mixed. However, all seem to be coming in pretty close to the USDA estimate last month as well at 4.589 billion bushels. I'll have my production estimates out later today. Following yesterday's census data for July, I'd look for a 25 million bushel increase now in corn exports, 10 million higher on the soybeans, and another 20 million bushels tacked on to wheat. Later this morning, we'll also get our weekly EIA report showing the ethanol production from last week. This was delayed today due to the Labor Day holiday on Monday. Right now, I expect no change to the USDA forecast for corn used in the production of biofuels, holding steady at 5.45 billion bushels. As we get deeper here into the U.S. harvest, and production becomes a little bit more certain, South American plantings will take on added significance in the marketplace. Right now, most estimates expect only a modest increase in Brazilian plantings this coming season. AgRuel is forecasting acres at 46.4 million hectares. This is up less than 1% from a year ago and the smallest year-over-year gain in nearly 20 years. By the comparison, the USDA is a touch higher at 47.3 million hectares. Either way, plantings could very well be delayed as conditions remain very dry across much of the west central part of the country in South America. U.S. Midwest also very dry, which is causing some logistical issues for barge traffic, moving crops to the Gulf Coast and into the export channels. Several barges have reportedly gotten stuck due to low water levels, which is causing backups and adding costs, which is making U.S. exports a little bit less competitive in the global marketplace. Unfortunately, it's likely to get worse before it gets better, with the U.S. Midwest looking very dry, looking out for the next week or two. The recent heat and dryness, I think, is also taking the top edge off of both this year's corn and soybean crops. From what levels, however, is the key and will likely not be answered until we get deeper into the harvest here. Combines start to roll across Illinois, Iowa, Nebraska, and Indiana, key states like that, as it works its way north. Inside trade for D's corn overnight, resistance at 424 with support at 406.5. Inside trade for Nov beans as well, overhead resistance at its 50-day moving average at 1032.5. Support at $10. Inside trade for both Chicago and D's Kansas City wheat contracts, taking a little bit of a breather after 6 consecutive higher closes. Thanks for listening, everyone, and have a great day.